The following program is paid for by EG Tax. All opinions or statements expressed on this program are solely those of EG Tax or its guests and do not reflect the opinions of News Radio 930 WBEN or Odyssey.
The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and we're talking taxes, and we got 17 days left in 2024, and we're going to make sure you know what's going on and what's coming up. And I'm joined in studio with Tiffany Fabian. Hey, Tiff.
Hey, happy Saturday.
Happy Saturday to you. And Christopher.
Hello, Esther.
Hello, Christopher. I got all my Christmas shopping done. Ha, ha, ha.
Chris and I have been hitting it hard, and we've been like teamwork, and it's like empty nesters, and so we get to just like go shop all the time, I guess. So we're just having fun.
Well, my brother loves Gracie said to get my brother a golf bag with the Detroit Lions on it because he's from Michigan, and he's taking pictures and showing all his buddies and they said, I wish I had a sister like Esther.
Oh, he loved it.
Yeah, and I gave it to him early because they were going to Ohio.
Kudos to Gracie.
Right. Anyway, I'm Esther Gulius, the Tax Lady from EG Tax. We have 17 days left until the close of 2024. That means all income received that is taxable has to be reported if it's constructively received before December 31st, and all expenses paid that are deductible if they're postmarked on or before the 31st. So you want to make sure that if you, in this hectic time of year with parties and things and shopping and the Bills and the Buffalo Bills and the Buffalo Bills, I mean, all those kind of things, you want to make sure that you pay attention to your finances because it could make a great difference. And really, we're looking at 2025, some interesting things coming down the pike, which could save you a lot of money. So obviously, if you could not have the income in 2024, push it off to 2025. So, don't bill people. That would be a good tax move.
I had a client text me yesterday, and she wants to take $40,000 out of her IRA. And so Chris and I talked to her on the phone last night, and we advised her to do $20,000 in 2024, since we're almost to the close of the year, and then 2020, and
which
then 2025.
Which really makes sense because those 17 days, anything received, constructively received in 2024 goes on 2024. But if you spread it out, or if you could wait till 2025 to get the 40,000, right? Then you actually add on a whole year and 4 months.
Yeah, well, but she didn't make much money in 2024, so it would be better for her.
Oh, I see.
Tax-wise, if she didn't make any money in 2024. So.
All right, I'm Esther Gulius, the Tax Lady. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Want to make sure that people know what's coming down the pike. One of the things that they just announced is that Medicare portion of your Social Security withholding is going up to, where's that figure?
You texted it. What you said, 17,176. 100, right?
And it's your Social Security tax, not your Medicare.
Right. So that's the 6.2% that you pay, the 6.2% that your employer pays. So since 2020, somebody that is making maximum amount of wages, their Medicare portion has gone up between them and their employer $4,762. So there's that thing. The other thing is you got to watch out for the 1099-K form. So if you did third-party pays that were $5,000 or more, they have to send you a 1099-K form. In 2025, it goes to $2,500, and in 2026, it goes to $600. So all those things
Yeah,
coming down the
actually,
pike as well.
Chris, yesterday there was a client who walked in and he had a tax question, and he came and pulled Chris aside, and his question was that you guys haven't been talking on the radio about what 1099Ks, Chris?
Yep.
What was his?
I just
exact,
did.
I know, but what was his exact question?
What's the limit? And like you just said, it's 5,000 this year, then it drops, and then it drops, and
Yeah.
and that's if they don't change it again in the next 14 days, because they can do that.
Right.
They can.
Yeah,
And,
and he-
here's
he
the
sells
thing.
Bill's
That's
tickets.
somebody is required to send the 1099K if you have 5,000 that you paid them and they receive that. But that doesn't stop somebody from sending it if it's 1,000.
Right.
Yeah, because this gentleman sells Bill's tickets, and so he's going to get one over 5,000, and so it's something that concerns him. You know.
Right. And so did you show him what you do? You put the income here and you put the
Yeah, well,
expenses there?
he's made a lot of money on it, so it's a little different for him. So explained how he has to know what he
Well,
paid.
you know, and that, isn't that the whole thing with taxes? It's only a problem if it's a problem.
Yep.
I mean, there's all kinds of things in tax code. If it doesn't affect you, it's a yawn. It's only a problem if it affects you.
Just like.
And
lots
that's why
of
we
things.
try to make this so broad-based, because we're talking to such a large audience. By the way, our offices open up January the 17th, right?
Yep. It's January 17th. They'll be
And the
there.
IRS doesn't open up till the 29th of January, but we'll get everything. We have all of our software, and we'll get everything ready so that, boom, as soon as the IRS allows us to send returns in, we will do that.
And
So
we have
for
a-
those of you looking for your refunds.
We have a new office. Kensington and Bailey moved to Cleveland.
Cleveland.
Cleveland and
Drive.
Century.
Yep. So it's a brand new, beautiful office, and
With parking.
the supervisor there, she's been working for us for 30 years. So what a testimony! And so for her 30-year anniversary, yay, she gets
a new office.
place to hang out at. Yep.
Right. All right. The other thing is, if you're age 72 or older and you have pension plans and IRAs, what do you need to do before the end of the year?
Max it out.
Your RMD.
Well,
You have to do
sorry.
your required minimum distribution.
I missed part of what you said. Obviously,
Right.
sorry.
That's okay. So don't forget, if you're age 72 or older, actually, yeah, older than 72, that would be the correct way to say it. Over age 72 and you're age 73, you have to do your required minimum distribution before December 31st. Otherwise, you're looking at a 25% penalty. Unless you get it fixed right away, then they drop it to a 10% penalty.
That makes me think of another client who texted me a few days ago. She's 71 years old, and she said, Tiffany, can I still put money into my IRA? And I said, as long as you're working. And so she can put $8,000 in, and her husband isn't not working, so he could draw off her wages as long as he's not over the age of 73, and he's not. And he can also put $8,000 in because
Well,
she's
it doesn't
made
have
more than-
anything to do with his age. Their age doesn't. Ages has nothing to do with if you can contribute to your IRA.
It has to be wages.
Right, it has to be wages, but it doesn't have anything to do with their age.
Yep, you've said that like 4 times. That's
Yeah.
great.
Okay, I just wanted to make sure that everybody understood that. And so the other thing is, if you're doing your RMD and you're somebody that wants to give money to charity this time of year, this is Christmas, instead of doing the distribution, you can do a QCD.
Right, the qualified charitable distribution, where the money goes directly from the IRA to the charity. It doesn't touch your hand, which means it doesn't touch your tax return.
Right, and it's a great way to not pay taxes on your RMD.
Right, I had somebody the other day call and wanted to. I said, well, won't you do a QCD? He goes, well, how does that help me? And so I went over, looked at his return, pulled it up, and I said, well, for every $1,000 of your RMD, you're going to pay tax on $1,750 because of your Social Security. So that just means you're going to pay that much more in taxes. And by putting it down like that, black and white, where he could see it, he goes, oh, I think I got to look into that.
Right. I mean, obviously, if you're somebody that doesn't give to charity, you can just ignore what we're saying. But like many people give substantial amounts to charity. Well, if you don't want to pay taxes on your required minimum distribution, by doing the direct charitable rollover, you don't pay taxes on that, on the IRA portion up to $110,000. So it's a great loophole,
Yes,
right?
for sure.
All right. The other thing is we want to talk about before we break for news is if you're somebody that has a trust, you want to make sure you do your trust distributions before the end of the year. Why?
Well, because the tax rates for trusts go all the way to the maximum tax bracket, like at $12,000. So you're looking at 35% when the income's over $12,000. Where for an individual to hit that high for a single person, it would have to be like $380,000. So
Right. And so if your income was 30,000 on your trust and you don't distribute, you're going to pay at the maximum. But if you distribute and you're in the 12% tax bracket, all you pay is 12% versus 38.
Right.
I mean, so make sure if you have a trust that you're in charge of, that you do your distributions in the next 17 days.
correct.
Right. All right, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're going to take a short break. We'll be back on the other side. Hey, to us, you are family, and family, we got a new tax season looking us in the face in about 17 days, but we still have time to pull a rabbit out of the hat, and that's what we're trying to do here. So I'm joined in studio with Tiffany Fabian, Christopher Fabian. We're talking taxes. Want to make sure that you understand if you are somebody that has a limited liability partnership, limited liability company, or you have a 1120S corporation that's taxed as an individual, you have to file with FinCEN, the Financial Crimes Network. You have to do your beneficial ownership information, or else they're going to charge you $10,000, $500 a day, but it's be so late it's going to be $10,000. So please, if you haven't done that and you need help, EG Tax will help you. You got 17 days to save $10,000. That's pretty good.
It is. It is. I know somebody's challenging this in court, I think, but yep, that's the law.
Right. That's you don't want to get the bill in the first place, right? And
Correct.
so they don't charge you anything to do. I mean, it's not like there's a tax involved, so it's not going to cost you anything. But failure to do it can result in you getting a bill for $10,000, and those aren't fun. We understand about bills, right, guys?
They keep coming.
Okay, and the last thing before, again, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. You can make pensions to your pension plan before the end of, you got 17 days to do that, especially if you got an owner match. Please put money in your pension plan so the owner can do a match for you, which is free money.
Yeah. It's, you used to teach me it's like opening up the window and throwing the money out the
It
door.
is
window.
throwing money out the window.
Yeah.
Okay, we got a text here, right?
Yes, it says, can you explain the RMD formula in simple terms? Assume $1 million to draw after the age of 73.
Okay, it's really simple. Basically, all these years you've been stockpiling money. You put, especially if it's a traditional, and you guys can help me here, jump in. The money was put in before
Pre-tax.
taxes. It's grown before taxes. So you got that $1 million here, and the IRS is sitting around saying, we really would like some of that money. It would be nice to tax some of that. So what we're going to do is we're going to force you. It's our requirement to do this distribution based upon your life expectancy, because by jinkies, we would like some of that money. So you go to the uniform lifetime table, and you would see that unless there's some, and I'll have Chris explain some of the nuances, but in simple terms, if you are a single taxpayer, they think you're going to live another 26.5 years. So you would take your $1 million and divide it by 26.5 years, and that's the required amount of money that you have to take out. this year, in the year that you're 73.
Yep, and there's some exceptions the year that
All
you're
right, but
73.
Chris, tell the exceptions about the 10-year younger thing.
Well,
over
that's
here.
if you inherit it. But if it's your money, then you know, the year you turn 73, you have to actually April 1st of the following year to take out the first distribution. But then by the end of the year, you have to take out the second distribution as well. So if you're gonna, it's where tax
Double dip.
planning comes into play, and you got to see what's better, to get taxed every year or get double.
That only happens in the first year, though, in the year that you turn
Exactly.
73.
Right,
Right.
right.
So you can actually push it off till the next year, and then you do 2 distributions, and if that's what, especially if you're somebody that has lower income, or you think, well, I'm going to wait and see what Trump is proposing, so I'm going to double dip. But basically, it's based upon your life expectancy. That's the requirement, because they really want your money. And if you live to be 120, your divisor is 2. So believe me,
You
they're
got to
gonna get
take
the money.
half.
Right.
Yeah, and so where Esther and Tiff were saying earlier was the 10-year thing is, like I said, when you inherit an IRA or a 401k from an individual, a non-spouse, if you're more than 10 years older or younger than that person, you have to take that money that you inherited out over those 10 years. So it's not to your
So that's
100.
not like what we were first saying. This is another required minimum distribution, right? Another form of it.
Correct. Right, because there's required minimum distributions on inherited as well.
Right.
Yes,
So
and
that's basically it. I mean, to be simple, it's just they really are saying, by jinkies, we'd like some of your money. right?
right. And if you're over 70 and you did inherit, you could also do a QCD on your inherited IRAs as well.
Right.
So-
That's that qualified charitable deduction.
And then really a quick question, what if they have multiple IRAs? Do they have to take from each of them, or is it it's collective? And so you can add up all your IRAs, whatever the grand total is, and take it from one.
Correct. Yeah, take it out of the lower earnings.
Right. So if you have them stuffed away in different CDs, for instance, and you have a 5-year CD, a 7-year CD paying 5%, and you got a 2-year CD paying 1%, obviously you would add up all of your IRAs and take it out of the lower yielding CD, that if that's how you have it, or your investment accounts.
Right.
Okay. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930, and we have Joanne calling. Hello, Joanne.
Hello. My name's Joanne. I'm on Social Security disability, and I was wondering if I could invest in Bitcoin and take profits without being penalized.
Well, this would be just extra money that you have, and you want to buy Bitcoin, right?
Yeah. It would
And
be
so your
tax-
question is,
tax
would you
money.
be penalized?
Yeah,
In what you mean, against your Social Security?
correct.
Okay,
you
so
sell
if
it.
you're on Social Security disability, basically what they're saying is that Joanne is unable to work in gainful employment because she's disabled. So only wages and self-employment would affect whether or not they would revisit whether or not you could stay on disability. And actually, in many situations that I've seen, they give you 6 months to a year, many times, sometimes 2 years, to prove that you aren't able to work, even if you do go back to work. But your Bitcoin would have nothing to do with your disability.
Okay, is it because it's passive income?
It's because it's passive income.
And if you don't have to file, Joanne, maybe when you sell Bitcoin, it might cause you to have to file. So maybe be careful of that.
And is there a certain amount that
Are you married or single, Joanne?
single?
So are you under 65? Yes.
Yes.
Okay, so your standard deduction is like going to $14,000. So until you get to around 14,000 taxable income, you would owe no taxes anyway, and that's going to go up every year as we move forward.
You have
anyway.
no pension coming in or anything like that?
No.
Just your Social Security disability.
So keep your
Right.
gain
So
under
you're
14,000.
good. So I mean, I hope, the best thing in the whole wide world is that you would have to pay taxes on $1 million, because that means Joanne made $1 million. Okay. So, you would never say to yourself, oh gosh, I don't want to pay taxes because I'm going to make $1 million. I'd make the $1 million and pay the taxes anyway, because if it's long-term capital gain, the maximum you're going to pay is 20%. So if you make $1 million, you pay $200,000 in taxes, but Joanne gets $800,000, which is not so bad,
Yay.
Yay.
right?
Yeah, I'm looking into investing into it, so I wanted to inquire.
Well,
And,
good.
thank
You
very
are
much.
you are good to go, and I hope you have a wonderful Christmas season, and I hope you feel better too.
Thank you.
All right, thank you.
You
I'm
know,
Esther
what-
Golias, I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 cell phone. Chris, I'm sorry. What I
That's
do?
all right. That's all right. I'm going to sound like my wife. I just got a text the other day from a client whose Bitcoin was hacked.
What?
He lost all his Bitcoin, and he wanted to know what he could do on his
Oh, my
tax
gosh.
return.
So he has a casualty loss.
Well,
have to litigate
he has to have a proof of the basis and everything.
Right, but I mean,
so
but
most
that's-
people
it-
don't.
But
with-
right away, I would think he has a possible casualty loss, casualty on theft, because it was stolen. But no, I'm not saying that he doesn't have to prove everything like you're saying, but that's where I would, in my head, that's where I would go. Anyway, I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're going to take a short break for the news. We'll be back on the other side with your comments, questions, and some more tax talk. Hey everybody, this is Esther Golias, the tax lady. To us, you are family. All of our branch offices open on January the 17th. The IRS is open for business on the 29th. We want to make sure we get everything nailed down the best as we can. And it is true that they have been taking this, the BOI to court, and it was suspended by Texas on December the, I think, 3rd it is. But what BOI Financial Crimes Network said that that they would recommend that people keep doing their BOI reports, so that in the event that if it gets to court and they lose the next injunction, then you have it all in there. So again, the $10,000 penalty has been suspended temporarily, but as soon as they go to the next level, and the Financial Crimes Network says that they're constitutional. The difference, I think, would be that the Trump administration, I think, would be less apprehensive to go after people with this. That's my.
That's what
but
you said
again,
the other day.
if you're somebody that likes to hedge your bet, I would do the report,
Get her done.
right?
I mean, if you have nothing to hide, like I told somebody that called in our office the other day, I said, are you money laundering? Are you human trafficking? Or are you selling drugs? What? I said, well, if you're not doing any of that, then do it. Get it done.
Right.
Because that's what they're going after. They already know who you are. They already know all this information. They just want to put it in a nice, clean database.
Right.
So just get it done. One less thing to worry about. Don't be a procrastinator.
Right. And the thing is, this way, if it's overruled at the next level, you're good to go, rather
Right.
than scrambling. So now, speaking of businesses, if you're a small business, obviously, if you haven't gotten paid, and you can push off the income to 2025, I think that would be wise, right? But again, constructively receives means that you don't have the money, you didn't get the checks, and you put it in a drawer in your right-hand side of your desk, and you say, well, I'm going to wait until 2025. Constructively receives means you have control of the money. But if you seriously haven't gotten paid and you haven't billed your clients, yet if you're self-employed, then, and you get the income in 2025, even though it was done in 2024, it would go on your 2025 tax return. Same thing with bills. Pay up all your bills that you possibly can, because when you're self-employed, you save FICA and income tax, federal and state. So, that's a very good tip. And the other thing is you got 17 days to buy assets for your business.
Right. Yep. Because let's face it, when we're always doing corporate returns, like, give us your balance sheet. And so money in, money out. And so the things that
And
you
you
spend
want to
and
make
that you
sure
need.
that if you need, if you need a new computer, you need new printer, you need all that stuff, wait until January means you got to wait the whole year and 3 months before you get the benefit of that. Whereas right now you got 17 days. Everybody's running all these sales.
I mean, like, just a small example. On Friday, we had to renew our bulk mailing permit, and so it's due January 10th, and so I went and did it in December.
Right.
And so you got to do it. You got to do it, right?
Right. I'm Esther Gillius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. I thought it was interesting that we should talk about what is non-taxable income, because so many times people really don't know what some of these things are. First of all, personal injury awards. So, like, when you get into a car accident and you see them say, Celino and Barnes got me $8 million, how much of that is taxable?
0.
None. Correct. So personal injury awards are tax-free. Same thing with child support payments. If a daddy or mommy is paying child support payments to their ex-spouse or the parent, that the baby daddy or whatever, child support payments are tax-free.
Right.
So are disaster relief payments.
Except for on New York State. About
Child support's always taxed.
Yeah, I know. I was talking about alimony. Sorry.
Well, I'm getting there.
You go.
I'm getting there. Welfare. So when somebody's getting benefits from Erie County or Niagara County or Chautauqua County or whatever, that income is tax-free. So the parent could be getting child support payments and welfare, and it'd be tax-free, so they don't have to report it. Another thing that I think people don't realize, what a benefit it is, and if you take a look on your W-2, in box 7, you see a code D, and that says, or is it double D?
Box 12. A box 12.
Box 12, and it's a double D, right?
Yes.
Good. And that's not a bra size.
No.
Right?
No, that's
so that would be how much your employer provided, actually your health care benefits that are tax-free are on your W-2. And people don't realize just exactly how much your employer is kicking in for you. And it's a tax-free benefit.
Right. I had somebody call the other day, and they're like, well, I'm going for a new job, and they're telling me my pay is X amount of dollars, and my other health insurance benefit is X amount of Y, and this is Z, so my total employment package is A. So are they going to pay me A? I said, no, they're paying you X. But why are they telling me all this? Because they're letting you know
it's costing them money.
Exactly.
Yep. It was his package, his offer package.
Yep.
Mm-hmm.
Right. Foster care payments are tax-free. Gifts that you get, like at Christmas time, if Grandma and Grandpa are writing checks like crazy and they're sending you money, that's tax-free.
That's right.
Right.
How much can Grandma and Grandpa write off?
Nothing.
Nothing. So Grandma and Grandpa giving a gift is not tax-free to them. They can't take it as a deduction, but it's not taxable to the recipient. And Grandma and Grandpa have to watch that they don't give over $18,000 because per person per year, because they'd have to do a gift tax return.
And, well, the one way they could make it deductible, it would only be on New York State, would be putting it in a 529
That's
plan.
right, and that's a great thing. That's a great thing. Which would be a wonderful thing for at Christmas time to give $5, because that's for your kids' education or grandkids' education.
I was talking to a patient the other day, and she said, when I give money to my grandkids, I always put it in a 529 instead of giving it to the estranged in-laws because they don't use the money appropriately. So Chris raises a really good point.
You know,
Absolutely.
and that's but where is it coming from? And that's what a lot of grandparents don't, or listeners, when you're gifting money, yeah, it is tax free to the person receiving it, but is it going to, and it's not deductible to you, but it could be taxable to you, the giver, because
If
if it,
you're taking it from a taxable vehicle.
exactly, right. So,
Right, but if you just got it in a bank account, not an IRA or a pension plan or stocks, if you're just taking it out of your savings account, then it's tax-free to the recipient and is not deductible
Yep.
to you. And you have to make sure that you don't spend over $18,000 per person per year, or else you're going to have to do a gift tax return.
correct.
So, so grandma and grandpa could do 36,000. It's 18,000 apiece. VA benefits. So if you're a veteran and you're receiving VA benefits, that's tax free. Inheritances of money and capital assets. And I said capital assets because if you sell the capital assets right away, you get a stepped up basis and you won't pay any taxes. So and if you get money, that's tax free too as an inheritance. Interest on New York State municipal bonds are completely tax-free, federal and New York State. If it's a municipal bond outside of New York State, it's tax-free on the federal, but it would be taxable on New York State,
Correct.
right? Okay, why don't we have some other text here. right?
Yep, there's a text. It says the real point is what we shouldn't have had to report again to the government for further scrutiny, especially they already have every piece of information when we file our joint income tax return. Enjoy the show. Listen every Saturday. Thank you very much.
Well, that's and it's. I know when I first saw this, when they passed it, when you heard that they passed it last year, beginning of 2024, I thought, wow, are they going to ask for a blood sample next? I mean, because it really did feel invasive. It is invasive. All I know is let them go through courts, and I just don't want to have my clients pay a fine. That's all.
Yeah.
But it is absolutely invasive. You're right.
What the purpose is just like Chris says, to keep an eye on businesses that are not doing appropriate things.
Right.
Right, and then believe me, they're going to be the ones that aren't going to file.
Yeah.
I mean, and you got to remember too, how many people knew about this BOI that it was coming about in 2023? Nobody.
Yeah, they really kept it under wraps.
They kept. So what's going to happen? We'll say in February, if the court says nope, we're right, or they're right, you have to do this. Is it going to be on the national news? Is it going to be in all the print? Is it going to be on the radio?
Yeah, because
it will
is
be
not
with us.
You know
but
how many times you take a look and they've changed the law and everybody's all over it because it's very provocative and they think, oh, this is more money. You know, they talk about it, some of these tax changes, like it's really going to save people a lot of money. Well, on the flip side, when it's a negative thing, like nobody wants to talk about it.
Yeah.
But we need to because I don't want to have people pay
Right.
fines.
And then I think Chris raises another good point is that they want to have a database of all these businesses, right? Because right now it's so hard to ascertain all these businesses, right? I mean, people get
yeah,
taxed.
well, they have to go to the IRS. They have to go here. They have to go
well,
there.
they have to go to the state, right?
Yeah,
Because the state's the one
they
that makes
want to
them-
just have one database instead of going through 5, 6, 7 and getting different orders to get involved to get that paper, all the red tape.
So 8030930, 8030930, star 930 on a cell phone, 716-8030930 if you want to text us. Other form of non-taxable income that absolutely people don't even think of because people hate moving. I guess I don't hate moving. Is the sale of your personal residence up to $500,000 every 2 years. I mean, especially with what's happened to the Buffalo market, you could sell your house, walk away with $450,000 tax free, and move to North Carolina and just live in an apartment. I mean, but the sale of the house would be tax free if you lived in it 2 out of the last 5 years, and you're filing a joint return. $250,000 if you're single. It is a great tool for building asset value
Right?
and wealth.
Yep.
Okay, and I know we got to take a break, so we're going to take a little break. We'll be back on the other side with your comments, questions, and text. I'm Esther Golias, the tax lady. Boy, that's a big game tomorrow, Chris.
It is. It is. I was going to ask you if you're going to be watching it with your brother. That would be family feuding going on. But
'cause
he's not
from
home.
Detroit,
Yeah.
and I'm from Buffalo. He yesterday when I brought him his golf bag, he said Detroit's got all kinds of injuries and Buffalo doesn't, and so he was kind of making me feel better. But I won't feel better till after the game's over.
Till after the fat lady sings, as they
That's
say.
true.
Right.
All right, I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. More tax-free income. I think everybody knows Roth contributions are tax-free because they grow tax-free, and you don't get any benefit when you put your money into a Roth. So when you take the money out, it's tax-free because it's your after-tax dollars.
Right,
So
but
that's tax-free.
you still got to be over 59 and a half to take it out tax-free. If you're younger.
As far as the appreciation goes.
Correct.
Right. Alimony on post-2019 divorces, that's tax-free on the federal, taxable on New York State. Housing allowances for clergy. So if the church gives you as a pastor a housing allowance and you spent it all on housing, that's tax-free to the pastor.
Right.
And by the way, they should make sure if they have a housing package that they segregate out that they have a salary package, rather, that they segregate out the housing to make it tax-free, but they have to still pay FICA on it.
Yeah, and many times those pastors, those wonderful pastors, don't use it all for housing, and so it becomes taxable, and so
Right.
you really
Right.
got to be careful of
Right.
that.
If you rent out your personal residence for 2 weeks or less, that income's tax-free.
Yep.
So, like, if the PGA decides to put a big fancy golf course in your backyard and they start saying, well, we want to rent out your house for the PGA that's going to be here, and you move out for 2 weeks, that's tax-free income.
Yeah, I probably have said this before. My sister lives in Augusta, Georgia, and the Masters are there, and every single year they rent out their house for 2 weeks, and it's a win-win.
Right. Property settlements on a divorce are tax-free. Bankruptcy. So let's say you had $100,000 in credit cards that you ran up and you go bankrupt, that's tax-free as well. So, some people that have just made some really terrible decisions, bankruptcy is their only way out, and it is a tool.
It
in the
is.
toolbox.
Yeah.
Right? All right, we have some texts.
Yeah, we do. The first one, it must be somebody who knows Chris. And Chris, what did he say?
He said, Chris, do you want to talk about people taking 401k distributions before they are required to, if they are in a low tax bracket? I took mine this week after doing my what if with you. So that's what we talk about all the time. Use your tools to your advantage, where maybe you're under the filing threshold with your high standard deductions, so you can take money out of your 401ks or your IRAs before your RMDs and take advantage. Everybody wants tax-free money, and that's a way to do it. Or you could be in the 12% bracket, and when you take out your RMDs, it may jump you up to the 22. So take out extra now at 12, so you're only paying 12% and not 22%.
Right, and that's absolutely correct. So, let's put some numbers to it so maybe people understand what we're talking about. So, the standard deduction this year, if you're over 65, is how much? Let's see.
About
Single or
33?
married, did you say?
for a married couple, about 33,000.
So, that means until you get 33,000 in taxable income, you're not going to pay any taxes. So your Social Security, when half of that is added to your income, you're still way under. And so that means you still have room to take like 15,000 out tax-free. And so many people just say, well, I don't have to take it out. Why would I take it out? Because you would take it out tax-free. And you got 17 days here to do that. If you're somebody that doesn't have to file a return, give us a call. We'll tell you how much you can take out tax-free.
That's right.
Right?
And-
Then what else we got here?
Hi, everyone. What to file when winning on sports betting apps? Thank you and Merry Christmas. if winning more this year, for instance, is it better to hold on and not cash out until next year? For example, the winnings are $12,000 and transferred to a bank account to pay credit card.
So it's constructively received.
Right. Others winning keep in sport betting. So am I taxed on all winnings in New York State?
Right. It's all right. So it's constructively received. He's got it in a bank account, so it's taxable. It's okay. So he's
can't
got
hold
all
off.
of that income that's going to be taxable. He can reduce it if he can itemize by his winnings as an itemized deduction. It's taxable federal and New York State.
Right. They say, I'm looking this up online because it is really confusing with the sports betting, because a lot of people do think it's when you take your money out. It's when you win it. And supposedly it's when you win over $600, then they will issue
They're
a
going to issue a
W-2G.
1099. Right.
So to answer his first question, it's going to be reported on a W-2G. And
it's whether you cash it in or not. It's in your bank account. It's available to you, constructively received.
Yep.
So you got to report it on your tax return, and you can reduce the winnings by your losers up to the income, only if you can itemize your deduction.
Correct. Yes.
Okay, what else we got?
We got John from Amherst. Hey, John, how can we help you?
Hey, Esther and team. I just wanted to call and say I've been actually in the tax field for probably 30 plus years myself, and I appreciate the public service you do with sort of providing education to the masses on what is often a complex area. I know I've dealt with returns that can be thousands and thousands of pages long, but I've been listening to your show for quite a while, and I deal more on the corporate and international side, and I still pick up things that I haven't thought about, certainly on the international side. So,
what do you think
that's
about
nice.
what do
Thank
you
you.
think about the BOI? What is your opinion?
pardon me, say again?
Oh, what do you think about the BOI reporting?
Should people get it done, or should they wait?
Oh, are you talking the Transparency Act?
Yeah,
Yeah,
that.
that's Corporate Transparency Act. Yeah, I know there was the stay that they had on that. I think people will pause. I think you're absolutely right that there's going to be more people that are already compliant. There's a lot of exemptions for that for publicly traded companies and companies that are already reporting. What they're trying to do is capture companies that aren't doing any
The
reporting,
little guys, right?
which are the ones that are tending not to probably comply to begin with. So
Right.
we've had a big effort on the Transparency Act in particular, and we'll probably pause until we see what happens with that Texas ruling.
Yeah. Smart. Yeah, well, it's so thankful. As accountants and tax preparers, I appreciate what you have to say, because so many things we can't handle and we bounce to other people. I know yesterday I was out delivering some Christmas gifts to some partners, and so it's always good to hear somebody out in the community because we help each other, right?
Oh, yeah, absolutely. And again, I've dealt with taxes in so many different global jurisdictions. When you get out of your depth. But there is some basic understanding and sort of issue identification and sort of the education that you guys are doing that I think is valuable for just to demystify taxes a little bit.
Well, that's what we want to do. That's for sure. Well, Merry Christmas to you.
Hey,
And
Merry
thanks for your call.
Yeah,
I'm Esther Golias, the tax
Thank
lady
you,
from
John.
EG Tax, 8030930, 8030930, star 930 on a cell phone.
See?
Other sources of income that maybe people aren't aware of is when you sell business equipment. Why do people need to know? So let's say that I'm a landscaper and I sell 2 of my landscaping trucks. Why is that something I should be aware of that I have to let my accountant know?
Right. Well, in years past, you used to be able to exchange that truck for another truck and just reduce the basis of that new truck. But now the government got rid of that side of a 1031 exchange and said, nope, when you sell a piece of equipment or a vehicle that you're trading in, you still have to pay tax on that. And then you start the new one at the purchase
At the
price.
higher rate, right.
And why do you have to pay taxes? Because you depreciated. You wrote that off year after year, or you took.
And not only do you have to pay taxes, you pay at the same rate that you would on a W-2. So it gets no capital gain treatment.
Right.
So it's taxed as ordinary income. Other income earned abroad. This is that our gentleman that just called. He deals with international stuff. If you're a U.S. taxpayer, you are taxed on worldwide income. There's a foreign tax credit, and there's a deduction you can take for income earned abroad if you were living there. But a lot of people aren't aware of the fact that if you earn income, no matter where you are, if you're a U.S. citizen, you pay U.S. taxes.
Yeah. Larry from Georgia called last week, and he had that question about moving to another country.
Right.
You
He
know,
was going to go to South America. All right. And other forms of income, embezzlement and theft income. Now, one would say, if I'm embezzling, nobody's going to know. But if they catch you, right?
Mm-hmm. That's how they
Then
got Dottie.
that's all. Then now you are guilty of fraud, and with the Internal Revenue Service. So embezzlement and theft income is taxable. It's so interesting because the tax field, if it's income and it falls into certain categories, it's all taxed differently. And so that's part of what we want to do. We want to help you to make sure that you minimize your tax liability and maximize your refund if you're somebody that gets a refund. Speaking of refund, you should really take a look at your W-4 because they're holding up refunds while they're verifying your income, to many people. So you might want to think about changing your W-4 at work this year, right?
Yeah, definitely. And so
Because don't get a big refund.
no, especially federal and state.
Get the take-home pay. Increase your standard of living. Don't just wait for tax time to get the money back.
Right. And what are they doing with people who are getting refunds? They're saying, oh, you have to identify yourself.
Right. We're holding it up until you prove who you are. And don't forget, if you're paying bed taxes on a nursing home, that 6% tax, you get a big credit on New York State for the bed taxes that you're paying if you're a private pay patient. And of course, if you're a freelancer, somebody that's self-employed, you got to do a Schedule C on that, and you got to put your mind in the game. If you're self-employed, even if you're not legally a legal entity, you still have to report that on a Schedule C. Anyway, I'm Esther Gilius from EG Tax. If you need help before the end of the year, we're in business and we're doing tax returns. So we will help you. Our corporate headquarters is open on 1890 Colvin. You can go to our website at egtax.com. Until next week, I'm Esther Gilius, the tax lady, with Tiffany Fabian, Christopher Fabian. Thanks for listening.
Go Bills.
Go Bills.
Go Bills.
The previous program was paid for by EG Tax.